Right. This is a big call, but it's not really because I know I've said it before. Being a bit of a natural bear over the last however many months, I'm going to be like a lot of bear kind of guys and say, mate, I'm going to call the top yet again, right? But this time I really mean it. I'm going to go through, I don't know, there must be like a good 10 reasons why this is looking really toppy at the moment, 10 technical reasons. Now, of course, the problem with technical analysis, right? It's all looking to the left, right, of where we are. And as everyone says, future performance is past performance is no indication for future performance. But that's exactly what technical analysis is all about. So let's look back to see, try and unfold what's going to happen in the future. But notwithstanding, as they say, here's a whole lot of stuff that's going on, at the moment. This is the ASX daily, linear. You can see, this is a big washout, right? You can ignore that. Boom, 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 and ka-ding, right? That's a significant and material break, right? When you look at it with the top of that trend, this is a classic rising diagonal, and it's exhausting, right? That's so that's one reason. Yeah, let's look at another one. The Elliott waves, mate. I don't believe in Elliott wave theory at all. I mean, there's two things you want to know about Elliott wave theory. One, it's complete and utter rubbish. And two, in hindsight, every now and then it makes sense, right? And a lot of the Elliott wave guys, this is what they're looking at, right? So they say this is the fifth wave. It's exhausting, right? And even within this last one, they go like 1, 2, 3, 4, 5. Okay? So the Elliott guys say, look, that one is cleaned out. It's ready to go. So that's the second reason. If you look back a little bit longer, there's this one, right? Which is, again, and again, a longer time frame. You should look at it logarithmic. This is boom, 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 This is like, well, hang on, sorry, not that one. Going back even longer. I need to go back longer. This is back to like the GFC, right? So let's do that recovery from the GFC, that recovery, and let's line it up, right? This is right on the nutter, It's like ching, ching, ching. Another one, and this is the top. That is literally right on the ding dong. So that's another one, right? These long-term things don't get hit very often, and past performance, no indication of the future. But I tell you what, the last 1, 2, 3, 4, 5 times it's hit this line, it's come off. So there's another one. Another one is when you look at the weekly candles. It's an engulfing bearish candle, right? So it's taken out the week, right? Then it's counted down the clock, and it's had another one. This is a bear flag where it goes down, flags it, and then down again. So that's number 5, maybe 6, whatever. That's another indication that it's starting to turn over. Another one is the RSI. I mean, there's a lot of indicators, right? As I said, I'm hesitant to post this, because there's a lot of bears out there, right? I mean, there's a lot of guys that say this thing's going to run on forever, right? But that overbought on the weekly doesn't happen very often, right? And it's pretty overbought, like 76, 86. It hasn't been that overbought for a while. Like that's back in, leading into leading into the taper tantrums? Oh, a little bit before, a fair bit before that actually. But that's 10 years ago, 9 years ago. That's like 2013. So it's a long time since it's been that heavily overbought. Now this is just the Aussie market, that we're talking about. When I look at the futures in the Aussie, they've got a bit of a tell as well. If we go down to like a daily, this is a pretty good double top, right? You can see, so another tell, right? We've got some divergence in the momentum, like it's weakening, right? And these is, it's bee's dick away from being the absolute double top. But this is a kind of a toppy. This is a toppy pattern, and you kind of look where it's come off from here. Up resistance, up failed, right? resistance come up, there's a good chance it could, come down, and again, where would it come down to first stop? That's like 3% down here, 3%. Well, mate, isn't that a coincidence, right? This is like the bottom of the range from that previous one. It's a very natural point for it to go to. Now, I'm just hoping this happens this week because I've got some puts. A put position at 7,100. They expire on Thursday. So no doubt that the correction will happen on Friday, right? This is it's happened to me before, happened to thousands of people. The puts expire, and the next day they're worth a gazillion, right? Except that they've expired. So that's so that's another reason. The futures in particular, they show the double top more clearly. On the cash, this rising pattern, because of the dividends dropping out of the cash market, it's actually a flag, right? So that's horizontal. You see that. I referred that in the chart before. So that's just the Aussie market. When we look at some of the US markets, like the Dow, like the biggie, this around about 35,000. It's like this level here. It's broken. The Dow. The Dow is the granddaddy of all markets. And it had a bit of a stab here. That I don't know what that one's called, the doji, whatever it is. Again, there had a step down, rejected, came back up, had another go, resistance, and now it's through, right? Some would say, this is like this is a lower high here, starting to get a lower low, lower than that one, at least on a small time frame. But again, you can see some of the momentum is waning, right? This is the daily, right? And so there is this divergence that's been going on where the market's been going up, right? But on a weaker basis. That's not a good sign. That's a sign that a correction is coming. So that's the Dow, right? So it's looking a bit weak as well. When we look at the S&P, we're starting to see a similar story. Like this is quite a good turnover. When you think about tops and bottoms, you got to look for the price action that really says, I guess, definitively, or as definitively as it can be, that this thing is turning. This one, this little little round top, that's quite a good, to me, that is really looking like a real turnaround. I mean, it literally is a turnaround. And some of these candlesticks are really quite bearish. You can see it if you switch to the old Heiken Ashies, whatever, bit of a favourite. These things show more clearly. These red ones, it's like, correction, right? Start thereof. Again, you can see also the negative divergence. The RSI on a daily basis is weakening. The price action is going up. That's not a healthy sign for the market. Now the other one, so that's a whole lot just on these cash markets, and I guess you can see from here as well. These the price action it's exhausting. We're showing signs of exhaustion, where it's again just as with the Aussie market, these two are correlated. It's coming to the pointy end of the season, and it's going to break one way or the other. At the moment, it's looking pretty vulnerable. As I said, the Aussie market looks like it's turned. The Dow's look like it's turned. This one's showing signs of turning as well. Now, where could it go to? That's the $1 million question, like literally the $1 million question. Let's face it, it's been going gangbusters all year. You could easily have a 10% pullback, right? That's to the 23 fib, 4,000. Like, very good, technical resistance, like absolutely why not? 3,500 or around thereabout, very doable. These things could happen pretty quickly, and to me, it's showing. Well, I guess when these triangles do, come to their conclusion, which is imminent, they either pop up or they turn around and they pop down. The S&P's got a bit of a habit of these things where it pops up. It'll have like a little bit of a pop up, but then it really comes screaming down. So I'm pretty bearish on, as you can tell, on these things. Another one to look at is the dollar index. Now, the dollar index, that really tells you like the risk on, risk off plan. And when we go out to like a bigger time frame, to me, this looks like a double bottom, and it could really take off, which is a risk off kind of scenario. And if we go back, like, let's look at it on a monthly kind of basis, you can see, really, this is leading up to the .com, dollar rallied, then it just like came screaming down. Here, it kind of came up, so, and this level where it's at, I guess it's kind of middle of the park. But to me, it looks like this move has kind of come up, trending sideways in this range, but it could easily, when I look at it, kind of think it could easily kind of bump back up. That'd be like a risk off, situation, and particularly with this double bottom here. Again, where could it go to? From there to there. That'll take it. Let me guess. That'll probably take it up to around about there, right? Let's have a look. A little bit further. I mean, if we look at the neckline of what's going on here, there, lay it on there, it could easily like take it up to there, which is, that kind of makes sense, that kind of 96, 97 level. So the dollar index to me is looking like this is a double bottom, could take off, dollar stronger, that's a risk off trade, equity markets going south. Another big one, which is, to me, is the sign that sooner or later this thing is just going to totally explode, is, just look at this, right? show with a line, right? This is on a linear scale, right, which is kind of cheating, right? But this is like leading up to, that was the GFC and before that. This price action, it's ludicrous. It really is absolutely ludicrous and unsustainable, right? Markets just do not sustain this literal vertical action. This is monthly, and on a big thing, like momentum kind of RSI is declining, like again down here. This is got, all the hallmarks of a really big correction. And, I don't want to sound like a goddamn conspiracy theorist, but for it to come back to like 3,200, that's, that's very, 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 very doable. Let's face it, in October last year, right, just October, not even 12 months ago, that's where it was, right? When it took off after, the election result in the US and the vaccine news coming out, it just took off. When breakouts happen, like these big breakouts, a lot of thinking, you hear a lot of people saying it could easily come back to where it broke out, and that's where it broke out, and it did the classic lightning bolt up. It had resistance there, comes up here, turns around, love it and leave it, and it's off. Another little one here. But to me, it's looking like a significant correction is very, very doable. So for me, what does that mean with with trading? I guess a few things. Like I'm short the Aussie because if it's a risk-off situation, the Aussie inevitably we're caught up as people buy dollars. I'm long. I've got that put, which is no doubt going to expire before it all goes pear-shaped, and I'm going to be looking for, I guess, some confirmations of it breaking down because, as I said, I've been calling this, repeatedly, right? When it was here, I thought, mate, that's the top, right? 61 retracement, down, up, got to go down, bust up, off it takes again. So, I've called this, then here, right? Oh, yeah, this is the previous top, it's got to come down, and what it did a bit of a give and go, away we go, off again, right? So I've been wrong plenty of times, and no doubt I will be wrong again. But with this one, I'm watching particularly closely because the planets are aligning on quite a few fronts. And so the levels that I'm looking for is, when it starts breaking below here, which is like 73.90, call it 7400. That's on the cash market. That would be a big one. But I think the more significant one is if it breaks this 72.50, then it really is a case of thin air. There's nothing to catch it, so it could really go down very quickly. After that, we're talking like 6,900. So what's that? That's like 500 points. 600 points. Yes, it's actually 700 points. That's your 10% correction. Yeah, look at that. Right? I hadn't prepared that. That's actually just the way it turned out, right? That's the ding dong. If this market doesn't go to 6,900, I'll be surprised. I guess, put it that way. Look, I think that's all I've got apart from my little conspiracy theory about when is this all going to happen. What's the trigger? I don't know what the trigger is going to be. But what I do know is there is a determined seller that for the last 4 months has come into the market in the US. This is the S&P. And on the 17th and 18th of all these months, they have come in and they've pushed the market down like up to between 2 and 3%. I've never seen that before. I've been involved in the markets since 1990 or whatever, beginning of 1990. I haven't seen this before. This is very weird. I can't think of any explanation except that someone is coming in the market. They know they've got rebalancing to do, selling to do, whatever it is, but they are pushing this market down on 2 trading days, the 17th and 18th, all the good business days around it, of every month for the last 4 months. The chance of them doing it a 5th are pretty high, or maybe they'll turn around and they'll say we were wrong and they'll buy it back and it'll be off to the races again. But we are very close to that. The 17th is is this Friday, if I've got it right. Then 18th is a Saturday, so it'll be the Friday and Monday in the New York sessions. That will be something that I'll be watching very closely because these previous months they brought it down to a trend line. We're on that trend line. If they come through with another 2-3%, then it is over.